Hey, it's Michael Saul. It is Monday, July 18th at 6:08 p.m., and this is the stock market trading watch list for Tuesday, July 19th, 2011. Going to look at the stocks we were talking about in yesterday's update. Wynn Resorts, no entry here. I'm not retro trading this like I'm reading some people are doing. It's just the most ridiculous thing I've ever seen. These super gurus that were screaming at the top of their lungs how bearish they were and how Apple was going to get crushed are now pumping their fists in the air that they're long Apple. I mean, it's disgraceful, and it's just hurting a lot of people because a lot of people unfortunately drank the Kool-Aid and took these people's words as gospel. And you know what? I am the farthest thing from perfect. And I try to communicate to everybody that it's okay to listen to anybody you want to, but take that information and process it and use it to help form your own opinion. Because that whole thing about you're responsible for your own actions, yeah, that it's real. Okay, so in order for you to truly be responsible for your own actions, you have to learn to make your own decisions. And look, I'm not sitting here and I'm not preaching from the pulpit here. Okay, I did the same thing. I blindly followed people when I first started and after I first started. You know, I subscribed to some services with some people that were doing good or had these super terrific indicators, and I would follow them along, and I'd be like, what am I doing? It's nothing wrong with buying a nice expensive indicator or a cheap indicator or a free indicator. There's nothing wrong with subscribing to newsletters or services as long as you take what they're giving you and set up your own trading plan with it. Okay, so I mean, I made these mistakes. I'm just passing them on. I'm not trying to sit here pointing my finger and going, don't do this. I mean, I did it, unfortunately. I didn't do it that much, which I'm happy about. But, look, I've bought indicators for my charting packages. One of them was $17,000 a set of indicators. Now, do I say that I got ripped off? Absolutely not. Did I make money with them? Yeah, sometimes I did, but I probably did not learn the discipline of trading with those indicators as well as I should. At the time, I was doing a lot of other things. I was just looking for a quick edge. And when you invest that kind of money, it's not red light, green light. Okay, you actually have to learn how to use them. So do I think it was a worthwhile investment? For me, it wasn't. But that doesn't mean that other people aren't using it to make money. Okay, so anyway, the point I'm trying to make is I'm not trying to, I already went off on the tangent. So I was going to say I'm not trying to go off on a tangent, but I already did. So all I'm trying to say is just make sure you understand that anything you listen to, anything you read, anything you watch, a video with some guy with some Staten Island accent like me, okay? You want to take the information and you want to put it in, use it for your own trading plan or dismiss it. You have no idea. As a matter of fact, one day I'm going to actually show you some emails, but I have to get permission, of people who write me and tell me they disagree with me. And yet they still watch me every single day. They don't disagree with me all the time, but they'll come on and they'll say, hey, you know what, Tiny, I saw your S&P video today. I don't agree with this. I think we're going to go up a little higher. I think your resistance level is a little too shallow. I think we're going to go higher. I think we're going to go down. And then they usually end it with, love the video. Yeah, because they're the smart ones. Now, whether they're right or wrong, it doesn't matter. The fact is that they're taking the information, they're putting it in their trading grinder, right? And they're grinding out the information for what it's worth to help them think, to help them, formulate a plan. I read everybody, unfortunately, okay? I read I read too many people. All right, my wife is like, are you ever coming to bed? Because I'm usually up late at night reading reports and reading a lot of websites and a lot of blogs, and sometimes it can get confusing. So I'm not saying that it can't, and that's not for everybody. A lot of people don't have the time. They want the information just, given to them in a nice, succinct fashion. That's all fine. But just remember, It's up to you in the end to come up with your trading plan. All right. So Wynn kept going, then had earnings, and now it looks like maybe 170 tomorrow, maybe even 175 if it can really start ripping. There's no trigger here, and just wanted to show that this pattern actually worked, but we couldn't get in. Okay, MLI, that was one from Friday, and that one dipped down, so there was opportunity to at least make up for the fake breakout here to the upside first, and now it formed a hammer. So I got to be careful here on this one. We did get a little bit of downside follow through from Friday. Let's see if we get further downside if the 10-day moving average, that purple line, comes into play as potential support. JVA, another, it's either an inside day or close to an inside day. Notice how it's holding the 20 EMA. Let's see if it can get a bounce from here. Let's look at Crocs, which we talked about in yesterday's video, and you can see here it's still in the consolidation, has not broken yet, so nothing to do on this one. Have a couple of new ones to look at. First one is Netflix. Netflix has been real strong, broke above 300 and has now pulled back. Looks like it has a hammer here at the 20 EMA. So also right here around support, notice it dipped back down through the previous resistance, which is now support, and then closed back above it. So let's see if Netflix can get a little buying action here, if the bulls are going to come back in and try to at least attempt to press this up back towards the highs. Let's see how far they can get. CMG, okay, CMG is in a nice tight consolidation here relative, right? I mean, it doesn't look too tight when you're looking at a 10-point range, right? 318 to wow, 329, yeah, about 10 points. All right, it doesn't look that tight, right? But when you compare it to the size of this move here or something like that, this is a nice consolidation. Let's pop up the weekly chart. Yeah, not a lot of help. I like the way the daily chart looks a little better. I'm going to set a last price so we could draw some lines on here. And we have this consolidation that we can watch. And let's adjust this Fibonacci grid and see if we can get a better view of where resistance might be. Hang on. Okay, so 354.06, another 27 points. I mean, this is basically a box, so what you want to watch for if it does break out is to first get a measurement of the box, and that's about 10 or 11 points, right? But then you have this as the next resistance to watch, which is the 261% external retracement of this swing down. Let me go back to the regular chart here. So watching CMG here, and it's been one of the stronger stocks. And then HFC, and this one is one we were looking at last week, and this one's in a nice tight coil, back-to-back inside and narrow range days. And the only reason this one came up for me is because it was on an old watch list, and it actually triggered something off. So I was like, hey, what's this about? And it's just a real narrow range and inside day. And it's back-to-back. So we can watch this one too, and overall this one has been in a pretty nice looking uptrend. So we want to watch to see maybe the bulls can come in and try to break this out again and see if we can get up to these highs. All right, so let's look at the usual suspects. Apple, just a monster, came just shy of 375, which was the target we were talking about. It has earnings, I believe, Tuesday after the close. And, I made a comment on the blog. I said, if everybody's buying it into earnings, who's going to be left to buy it, right? Here's Google, all right, still oscillating around 600. Nothing much to see there. Here's Research in Motion, still kind of headed down to the lows there, right? 2642 is the low. The target is 2582, which would be a retest of those lows. Let's look at Goldman. Okay, Goldman did get the low. We talked about how this should at least test the low, wound up breaking it before reversing. Could this be it? Could this be a double bottom? And could we try to get a bounce here? Remains to be seen. Caterpillar. All right, Caterpillar was in this kind of coil here. It dipped out below, tested the 20, and then came back up. So need a day on that one. Here's gold, GLD. I mean, not actual gold, but GLD. All right, and we were watching this resistance point up here, and you could see that it tagged it and backed off of it intraday, but wound up closing pretty good pretty good, up near the highs here. So got to watch this. This was not a reversal candle, so I'm not looking to jump in on this. All right, there was no reversal candle here. And let's center the last price, and you could see 160.35 would be the next resistance number up if we can get above Monday's highs. Okay, so that's really it for now, and have a great trading day on Tuesday. Sorry for the little speech at the beginning of the video that made it a little longer than I wanted to. Have a great trading day, and I'll talk to everybody again tomorrow.